Good afternoon, good morning, good evening to all of you joining us today for this PRI webinar on labour rights and infrastructure investing. By way of introduction, my name is Simon Whistler and I lead our work with infrastructure investors here at the PRI. This feels like a particularly pertinent topic to cover given current events in different parts of the world. Whether you're looking at the Gilets jaunes protests in France, ongoing debate, angst here in the UK over Brexit, the wave of populism across different colours, political colours in countries such as Mexico, Brazil, and the US, all point to tensions in the existing social, political, and economic orders. The way that this plays out over the coming weeks, months, and years will have long-term repercussions for the global investment environment, and of course, a heavy feature of that being infrastructure and the role of labour within that. For both investors and labour, these events point to complex and increasingly important issues, which also touch on some of the big picture topics that are capturing a lot of attention at the current time, such as how to achieve the Sustainable Development Goals and considerations around the so-called just transition. From a PRI perspective, they also fit neatly across several of our core areas of work on responsible investment, touching on the policy and regulatory environment, the role of active ownership and engagement, and the evolving application of responsible investment processes. They also highlight how critical it is for infrastructure investors and labour, among other stakeholders, to work together to achieve the success of key projects and their desired social and economic and other outcomes. Indeed, quoting from the World Bank, labour laws and union relations are key to the success of infrastructure projects. Failure to recognise their importance often inhibits, delays, or prevents the successful implementation of the project. Perhaps a case in part of stating the obvious, but all the more important and sometimes difficult in the current and future social, political, and economic landscape. Our objectives today are therefore to explore some of these issues from both an infrastructure investor and labour perspective, and particularly to highlight ways in which engagement and better understanding of the core issues at stake can help both sides achieve their objectives. And to do that, we have a suitably international group of presenters to help guide us. With me here in London is Elena Espinosa, who is a manager for social issues at the PRI. Calling in from London, but based in Australia, are Chris Newton and Celia Groning from IFM Investors. And in Vancouver in Canada is Hugues Letourneau from the Committee on Workers' Capital. I'll let each presenter introduce themselves in more detail, and then the structure of today's webinar is that each will speak for around 10 minutes to give an overview on their perspective and work on these core issues. And we'll then open the floor to questions from the audience. And to do so, please, probably the best way to do it is to send a message through type in a message through the webinar platform, and I'll collate those and put those to our presenters after they finish their presentations. So without further ado, I'd like to hand over to Elena to get us started.
Okay, great. Thank you so much, Simon, for the introduction and for the invitation to participate in the webinar. I'm Elena Espinosa, and I am Social Issues Manager at the PRI. So I joined in 2018 to support investors' efforts to address social issues such as human rights, working conditions, and modern slavery with companies in their portfolios, mostly by coordinating engagements and writing publications that support the identification of key ESG issues in the market. Before PRI, I worked at Business in the Community, which is a UK's leading membership advisory organization, which convenes FTSE 350 CEOs and senior roles and government officials around responsible business. And there, I manage the ITC's advisory work in corporate strategy development, impact measurement, sustainability reporting, and benchmarking. So that's me. And for today's presentation, I'm just going to give you a little bit of an overview of social issues and the work that we do at PRI. Then I will touch on how the PRI talks about labor and human rights and how this definition applies to infrastructure. I will then touch on the business case for investors to look into these issues in infrastructure in the form of risks and opportunities. And finally, a very short overview of different aspects to take into account when engaging with companies in your portfolio. So first, let me take you one step back and talk to you a little bit more about how we work at the PRI. This might not come as a huge surprise that the engagement team at PRI is divided into E, S, and G, so environment, social, and governance. Labor rights fall under the social umbrella. However, we make sure to make linkages when necessary. For example, for our work on just transition, we look at the social implications of the transition to a low carbon economy. And for our work on income inequality, we look at how companies' governance practices impact social inequality. So to give a little bit more detail, when it comes to social issues initiatives, the team does this in 3 ways. We coordinate engagements for investors around social issues, being the most recent ones, labor practices in agricultural supply chains and human rights in the extractive sector. And upcoming ones are responsible sourcing of cobalt and social issues in deforestation. So again, this is about including a social issue into an environmental engagement. Engagements are long-term projects that can go for 2 or 3 years, where PRI offers research and insight to investors to help with their engagements with companies while tracking progress on key corporate practices. We also conduct research, partnering with academic institutions, and recent examples of this are the Just Transition and Income Inequality reports that were recently launched, and currently working on Values to Valuation, a research project looking into the impacts of human rights performance on corporate financial performance. And last but not least, from our different engagements and research, we also publish short briefings outlining the business case for investors when looking at particular social issues and provide guidance on how to carry out engagement with companies. So on to labor rights. PRI uses the International Labour Organization's, or ILO's, definition of fundamental rights of workers, which includes the following categories: freedom of association and effective recognition of the right to collective bargaining, the elimination of forced or compulsory labor, the abolition of child labor, and the elimination of discrimination in respect of employment and occupation. PRI also uses the UN Guiding Principles for Business and Human Rights to frame labor rights, particularly when referring to global supply chains, as these are usually in places where human rights and labor rights violations are commonplace. In general, the starting point for respecting human and labor rights is to understand the impact the company's activities has on people, and this can happen across the whole value chain. And companies will have different levels of influence and control depending on where in the value chain they are. In terms of infrastructure in the supply chain, we'll look at human and labor rights around employees of different suppliers of goods and services, and when talking about subcontractors used for a period of time at different stages of different projects. For own operations, impacts and implications will be very different for staff located in offices than for those that are mobile, whether because they work on-site or across sites. And for client work, human and labor rights should be considered when bidding for contracts, so making sure to vet the clients themselves and ensure contracts include protections for right holders, and having the right policies and procedures in place to guarantee the adherence to contract clauses related to human and labor rights when delivering on long-term contracts. So before we look at the risks and opportunities associated to labor and human rights, I would like to show you a little bit of research on the state of play for infrastructure. So this information on this slide, it all comes from the sector reports published by VGO Iris this year. And I encourage you to have a look at the documents in more detail, as all this information is in the public domain. So when we look at the sector in general and its performance around ESG issues, we can see that the sector performance is not great overall. Both major subsectors here looked at here, heavy construction and industrial goods and services, are in the bottom half of all 39 sectors analyzed. For both sectors, best performers are based in Europe and North America, and laggards are mostly based in Asia and emerging markets. Both sectors have operations in areas where human rights and labor rights violations are quite common, particularly affecting vulnerable groups in society, such as migrant workers. And efforts around protecting these rights seem to be limited for both sectors. Scores around supply chain and human rights performance are quite low for both sectors, which shows that there is great opportunity for investors to push for more and better disclosure on efforts on this area. So in terms of the risk presented by not having oversight of labor rights in infrastructure, we can classify them under 3 main categories: legal and regulatory, as we see an increase in legislation being enacted around modern slavery and forced labor, which increases the risk of lawsuits and fines. We know that as many as 62% of companies in the MSCI ACWI index will be subject to either the UK Modern Slavery Act or the California Transparency in Supply Chains Act and the Business Supply Chain Transparency on Trafficking and Slavery Act in the US. Not to mention the difference of law mechanisms on human and labor rights, such as UNGPs, as mentioned before, and the OECD guidelines, which are based on the UNGPs and that allow civil society and NGOs to bring company complaints in front of the national contact points in OECD countries, and of course, the ILO declaration also mentioned before. Operational risk comes in the like of cost increase due to supply chain disruptions, and in turn creating earning volatility, project delays due to the lack of health and safety policies, mechanisms and procedures, or lack of quality control, or strikes from employees if they consider labor rights are not being respected. Also, operational performance may be weakened by increased worker turnover and decreased worker motivation and productivity. And the last category will be reputational risks in the form of media scrutiny, exposure on benchmarks like CHRB, so Corporate Human Rights Benchmark or Know the Chain, which haven't done a round on the infrastructure sector yet, but they are trying to expand to as much sectors as possible. So this will increase pressure from civil society to ensure labor and human rights are respected by companies operating globally. But not all is doom and gloom. Respecting labor and human rights can open up opportunities for businesses in general for the infrastructure sector. And keeping with the theme of threes, we can categorize opportunities as lower cost of capital. So several studies have demonstrated that companies with better CSR or ESG ratings benefit from lower cost of capital, thanks to markets recognizing the lower risk of those companies, and through improved efficiencies and productivity by mitigating risk around quality control, health and safety, and delays due to legal issues or lawsuits. Access to government contracts, just to give you an example, several institutional investors in the United States have adopted the so-called responsible contractor policies, or RCPs, which typically stipulate that for real estate and infrastructure projects in which the investor is a majority owner, then such investor will favor the use of contractors and subcontractors that provide fair wages and benefits and adequate training, assuming they offer competitive bids. These policies often favor unionized contractors as well, and among the long-term investors with formal RCPs in place are the California Public Employees Retirement System, or CalPERS, the New York State Common Retirement Fund, and various New York City retirement systems. And in the UK, we have the Social Value Act that calls for all public sector commissioning to factor in economic, social, and environmental well-being in connection with public services contracts. So in that sense, having good labor practices and policies can become a real competitive advantage when bidding for very competitive contracts where differentials in costs are not that significant. And finally, the most direct opportunities around employee retention. Through thought out labor rights policies, businesses can attract and retain talent and reduce turnover, increase employee motivation and engagement, which in turn can open up opportunities for innovation coming from the bottom up, as well as improve the business ability to preserve reputation and withstand negative impacts if and when they occur to a company. And the last point of my presentation would be, well, now that we know why it is important for investors to think about human and labor rights and infrastructure, here are a few pointers on how to engage with companies in your portfolio. As mentioned in the beginning of the presentation, the starting point for respecting human and labor rights is to understand the impact of a company's activities on people. So the starting point is to understand how companies conduct labor and human rights risk assessment and who at different levels of the business have responsibility and accountability for such assessment. Once impacts are understood and assessed, it is important to check whether companies have set clear targets and are collecting data to monitor outputs and impact and are using this and how they are using this information to implement corrective action. And all this information is disclosed publicly. And in terms of what issues more specifically businesses should be focusing on, PRI will suggest to start with the ILO standards or the UNGPs as a minimum compliance. And within and beyond that, investors can ask questions around good and inclusive work. This includes accessible and inclusive employment, by having transparent recruitment processes that do not discriminate any vulnerable groups in society, and working with recruitment agencies to guarantee they are upholding the same values and practices. This also includes making sure to offer more secure and stable contracts to all staff where possible and minimize temporary 0 hours or minimum hour contracts. Fair payment and benefits, because it is not just about providing jobs, but making sure that people is rightly compensated. So this could include making sure that businesses pay the living wage to all staff, and this including temporary staff and subcontractors, that it pays overtimes or offer other benefits to reduce the cost of living, and that different benefits are available to all staff, not just direct or full-time staff. And lastly, career development, offer career development and progression. So by offering effective training covering not just operational and technical skills, but also health and safety and well-being training, including mental health, for example. And then ensuring access to career progression to all staff, as to ensure no one is trapped in low-paid jobs, or as part of or offering this training as part of a planned transition due to moving towards a low-carbon business model, or as a consequence of automation, to name a few examples. So this was a very broad overview of how investors can engage with companies in their portfolios on labor and human rights, and happy to answer more specific questions during the Q&A, noting that I'm not an expert on labor law, of course, but happy to try to tackle as many questions as I can. Thank you for listening, and now I'll hand it over to Chris as he gives us a perspective from an investor on these issues. Over to you, Chris.
Thanks, Elena. Hi, my screen's gone blank as I'm talking. Chris Newton from IFM Investors. I head up the responsible investment team based out of Melbourne, but at the moment talking to you all from Warsaw in Poland. And I'm joined tonight or today with Celia, who is also in our infrastructure. Well, she's in our infrastructure team, but maybe she can give a bit of a background as to what her role is, and then we'll get into the slides as I work through the technology challenges I often have.
Yes, thanks, Chris. Hi, my name is Celia Grunning. So I'm an analyst in the IFM Asset Management Specialist function. Our function, we work both on asset-specific initiatives as well as we engage in portfolio-wide initiatives where we seek to share best practices across our global portfolio. And safety, which we will talk more about today, is one of those areas.
So as Simon gets those ready, so for the people that don't know, with regards to IFM Investors, global fund manager based out of Australia, we are owned by pension fund, Australian pension funds, profit for member pension fund, but we have over 100 billion of assets under management, roughly split 50% into infrastructure, then remaining with listed equities, private equity, and debt markets as well. In terms of our geographical spread, offices in the Northern Hemisphere in London, Berlin, Hong Kong, New York, and obviously in the Australian market as well. So part of the approach to ESG, so this will be slide 2 for you, Simon, and for everyone there, is really formed around our responsible investment charter. And this is how it relates to labour rights, not just in infrastructure, but across all of our investment classes. There's no doubt within our minds that a healthy environment, a strong and inclusive community and governance systems and frameworks that are transparent and accountable will drive long-term outcomes and investment returns for our investors and obviously the millions of working people who entrust us with their capital. As a part of that, we actually went through a process with our board and all of our staff and our investors to come up with these 8 principles that we were trying to drive through our investment process, not just how we select investments, but also how we manage them and how we actively engage or vote when it comes to equities. Obviously, the one today that we'll be focusing on is our principle number 6, which is profit is possible without exploitation. On the next slide, we sort of go through our approach there in terms of, what it means to us. the role of collective bargaining, the role of union participation, representation, workplace safety, means fair remuneration for our workers as well, equal opportunity. So it does include the right to work, the right to have a voice as well. So a lot of those principles that are around the ILO agreements. And we also go a little bit further with the way we look at how we treat human capital or labour rights within our direct investments in infrastructure. We're starting to look at how we promote learning and development opportunities within the staff at some of our assets around the world. We've even looked at things like gender pay gaps and things like that. So we take a holistic view about how we're doing these things. We've implemented things like parental leave, changing that from maternity leave, as just as an example of some really specific things. So a lot of those systematic wide or policy aspects that Elena mentioned before really come to fruition when we look at some of our investments around the world in infrastructure. I thought we'd go through a couple of just sort of case studies today, just to show you them in action. Thank you. I almost forgot which slide was next, Simon. But they're all driven from what we've identified during our due diligence process. So in the due diligence process, there's thousands or hundreds of elements we'll look at, but within the human rights and labour rights part, we will start to look at what their safety track record has been. We start to look at what their labour relations record has been, what their supply chain is, how they're managing their contractors. These are all identified, and obviously in some assets that we've looked at, some are not material, and although they're very important, we may move on to the next phase of development. So, for example, in a construction project, we'll spend a lot more time looking at how they're managing the larger construction labour force that they would have versus an asset which may have a very small amount of people involved in a head office capacity and so on. So you can note how it will change based upon materiality. Before we get into a case study, I thought Sylvia might just give us all a view around some of the safety approaches that we've taken as well. So go on to the next slide, and then we'll dive back in. Thanks, Don.
Thanks, Chris. Yes, as I mentioned, so within the IFM asset management team, we take a very active approach to asset management, and safety being a key focus area for us, where we currently have an area of resources available for our portfolio companies. So on the one side, we have a set of policies and guidelines, as well as what we consider to be a best practice board reporting toolkit, which we have available for our portfolio companies in order to guide them for how they should do their board reporting for safety. In addition to this, we also engage actively with them on safety reviews. So here we work with both internal and external consultants, and essentially what we do, we highlight for each company their safety performance, their safety culture, safety governance and organization, safety management systems, and safety reporting. And we find that our portfolio companies find these reviews very valuable, and we've got great feedback from all companies that we offer this to. What's come out of these are the key messages, which we then feed back to the executives of our portfolio companies as well as our board directors. So some of the key findings that we have from these reviews are that contractor safety management and the aspect of building a great safety culture are some of the challenges we're seeing. So these reviews have enabled us to now focus on these areas.
Yeah, great. And one of the things, one of the examples that's up on the screen at the moment is the Indiana Toll Road in the United States, acquired by IFM Investors a few years ago. One of the things that the team really spent a lot of time on was the safety culture there. And you'll see some statistics about post-acquisition, the decline in injuries, the decline in incident rates across the business. I'm happy to say that even 3 years later, or almost 4 years later now, that the statistics continue to come down. So even when we've had some rapid improvement, the emphasis we place on long-term safety culture continues to improve performance on the ground at the asset. And it was done by very simple activities that are repeated and are programmatic across the business. So it did actually start with, in essence, new equipment for a lot of the workers there. You'll see some of the workers there with their new high-vis vests and so on. But a company that's willing to spend on its workers on day one is as a symbol of how we respect not only their safety, their customers' safety, was really paramount to it, to the point where the Indiana Department of Transport awarded this project one of the safest road in its district. And to have a police officer from Indiana Department of Transport actually talk about how they feel more comfortable coming to work now because there are less accidents on the road is a fairly good indication of what can be driven here. And coming to Alina's point was one of the things around the opportunities here and the government endorsement and reputational benefit, which has allowed us to actually drive value and de-risk the project for our investors as well. So it's not just because human capital looking after people is fundamentally the right thing to do. It does have flow-on effects from an investment return perspective as well. And very quickly, Simon, I'll cover on the second issue, which is on contractors, and slightly different from safety, but contractor management is really important to us. And we noticed that a few years back at one of our airports in Australia, in Brisbane, there were some issues around contract management and unskilled workers not getting the right, training up front about their rights at work. So the business worked with us about redesigning the contracts with the people like cleaners, curbside workers, security guards for less skilled, sometimes English as their second language. We spent time with the contracting firm to teach not just the management team, but the workers what their rights were at work. And so since that time, we've had a complete decrease in legal breaches in terms of any issues at work, which has actually led to ultimately great, obviously, outcome for the workers themselves, but a lower cost of managing contracts like that for the business. So again, another thing, we're doing the right thing has actually led to a financial benefit for us. So I'll wrap it up there because I think I'm on the money.
Thanks very much, Chris. That's really, really interesting and great to hear some of those different elements. Passing on to Oog now to talk about it from the labor perspective. Oog, just
yes.
Up to you now.
Great. So thanks very much to the UN PRI for putting this on. I think this is a very important and maybe more relatively novel topic as infrastructure investing has grown in importance. I think the issue of how labor rights are embedded in sort of private infrastructure assets has taken on a new importance. So what I want to go through over the next few minutes are the 4 points that you see on this slide. I will go through a very quick introduction of what is the Committee on Workers' Capital, what are the key trade union and labor issues that come up when we speak about infrastructure investments. How does the CWC engage with investors around the topic of infrastructure, and what can be done to better align infrastructure investments with trade union priorities? So what is the Committee on Workers' Capital? We are a committee of the Global Trade Union Movement, so a committee of the International Trade Union Confederation. We have been in existence since 1999. And we basically convene trade unions around the world, whether it's global union federations, whether it's national unions, local unions. And we also connect union-nominated pension fund trustees from pension funds around the globe. So as most of you know, the link between unions and pension funds is essentially the following. So pension funds are the retirement savings of unionized workers. So very often what that means is that if there are no unions, there are no pension funds. And I guess that's a detail that we often forget, I think, when we speak about responsible investment and beneficiaries ultimately. So what is the objective of the committee? We work to foster strong, responsible investment practices within the practices of asset owners, but also across the investment chain. And we also work on the effective stewardship of workers' capital, and that is articulated through a number of work streams. For instance, a trustee leadership network, an alternative investment network, and a shareholder activism working group. Recently, we've been focusing on the topic of asset manager accountability, and I will be speaking to this in a few seconds as well. Another thing that we do is that we bring people together physically at least once a year, and our most recent meeting was in San Francisco just prior to the UN PRI in person a few months ago in September. So what are some of the key trade union and labor issues when it comes to infrastructure investments? So I would just like to zoom out here for a second and bring your attention, I guess, to two broad issues that come up that have been coming up, I guess, for a number of years within the Committee on Workers' Capital. The first one is around the infrastructure and the ownership model, and the second one, which perhaps is more pertinent to our discussion here today, are the working conditions in investor-owned infrastructure assets. So on the first one, infrastructure ownership model, how do we finance infrastructure? So as most of you know, there is an ongoing debate actually, and it's a very contentious debate around how to best finance infrastructure. If we look in current news, just a few weeks ago, the UK government announced the end to the PFI, sort of a PPP vehicle to finance infrastructure assets. So within the Committee on Workers' Capital, the position is that government debt-financed infrastructure and public ownership is actually the preferred way to finance assets. Now, that being said, we do recognize that infrastructure investments continue to grow around the world. There's two dimensions to that, of course. One is the supply of assets, and we see the sort of the policy positions, I guess, that come out of the international institutions, whether it's the G20, the OECD, or the World Bank, all sort of point to the idea of increasing private finance and infrastructure, and also the demand for assets. So infrastructure as an asset class is becoming sort of a bit more mainstream for not only the largest pension funds or institutional investors, but also smaller ones. So that being said, what can we do within the Committee on Workers' Capital, working with trade unions and with trustees to address the gaps in working conditions that come up in infrastructure assets once private ownership is determined. So I have three points here that I would like to touch on to comment very quickly. What we have seen often is that in what we call these asset recycling programs, where you have a transfer of ownership from the public to the private sector, one of the features, I guess, of these ownership transfers is that the new private owner will often look at establishing, I guess, efficiencies or reductions in costs. And one of the line items, I guess, that is looked at, of course, is the cost of labor. So what that has meant in practice is that often there are sort of weakened collective bargaining or the end of collective bargaining agreement for workers that were in unions. So that has been a bit of an issue. And I will just jump to the third point here around the missing accountability in subcontracted tasks, because there's a lot of subcontracting in the operation of infrastructure assets, as was mentioned by Chris a few minutes ago. And what we find often is that there is a gap in the supervision of labor practices of subcontractors, particularly where something like responsible contractor policies are not well developed or enforced. So this issue of enforcement is one that I'm going to come back to in a few seconds as well. So how does the CWC actually work with investors? Our primary touch point is with trade union and worker-nominated pension fund trustees. So just to give you an idea, this can be funds from, ABP in the Netherlands to Australian Super in Australia, to CalPERS and CalSTRS to the large Canadian pension funds like BCI or OP Trust, for instance. And we mainly do two things with the trustees. Number one is providing capacity, support, and tools to help them improve the policy and the enforcement of ESG policies and how they relate to infrastructure. And one of the tools that we've developed is called the CWC Infrastructure Guidance Note, which lays out a set of principles that asset owners can adopt to make sure that labor rights are actually respected in their infrastructure portfolio. And the second thing that we do is we take specific cases of labor rights violations, and those come to our attention via our links with trade unions around the world. And we basically work with trustees to drive change via the board of directors or via the investment committees of their funds in order to generate improvements in the working conditions of affected workers on the ground. I will touch maybe on one example out of the three that I had here for a question of time, but more than happy to elaborate on them later on in the webinar if there is interest. And so I'll say a few words about the deepwater container terminal in Gdańsk, Poland. And so this is an asset that is majority owned and managed by Macquarie Group. And the issue there was that between 2014 and 2016, some of the workers at the port were facing obstruction from the management of the port when they tried to organize and engage in collective bargaining with port management. And there was also an issue around the number of union leaders who had their contracts of employment terminated during this period. So what was the demand towards Macquarie? So Macquarie had a 64% ownership stake, and they also had an ESG policy, a responsible contractor policy. So the request was that Macquarie should be actually implementing that ESG policy and pushing management of the operating entity to engage in collective bargaining with the workers. And here I think it's important to make that connection with what was mentioned a few minutes ago by Elena, because collective bargaining is indeed it's a fundamental right and principle at work coming out of the International Labour Organization. So what was actually done within the Committee on Workers' Capital? Well, the International Transport Workers Federation, one of the unions that actively participates in our work, built some bridges with pension fund trustees at funds who were limited partners in the Macquarie Infrastructure Fund that managed the port in Poland. And the ITF also approached or raised awareness, I would say, with trustees at funds that were being pitched by Macquarie for other infrastructure assets. So this effect of it essentially taking this notion of workers' capital, working with trustees, really around the enforcement and the application of existing policies led to an outcome, and that was the signature of a collective bargaining agreement in April 2016, which effectively ended a 3-year dispute. So the takeaway here very quickly is that we actually often see good policies at funds, at infrastructure asset managers, but there needs to be sometimes more on the enforcement side of these policies. And very quickly, I'm going to wrap up with this here. What can we do moving forward? Well, I think first of all, of course, it's important to maintain the space that exists within our committee to question the net positive impact of infrastructure investments. So continue to question infrastructure investments as an asset class. And very quickly here, 3 sort of recommendations for different investment chain actors. Number 1, asset owners who use external asset managers. There is an opportunity to improve, I guess, responsible investment policies relating to infrastructure assets, because it is different than public equities. Usually in infrastructure assets, you have essentially larger ownership stakes, but a smaller number of investors in any given infrastructure project. So this gives a little bit more capacity or leverage for investors to be effecting change in those investments. For asset owners who use internal managers, I think there's an opportunity to bridge what I would call the ESG maturity gap, and that is often what we've been finding is you have good and mature RI and ESG policies and ESG teams, often found in public equities, and we sometimes feel that this does not get through to the infrastructure team or the infrastructure professionals, and that's where I think the role of trustees as fiduciaries and their perspective from the board can be important, because it is within their remit to ask how these teams are collaborating, and if they are not collaborating effectively, how they could be collaborating better. And my last point very quickly is around infrastructure asset managers. What I would say is the alignment of ESG practices with the client expectations. So remembering very often that pension funds basically are the retirement savings of unionized workers. So the trustees are often workers themselves who care about how workers are treated on the ground, and the beneficiaries also want their capital to be invested in a way that upholds or promotes decent working conditions. And what we're seeing is that more and more infrastructure asset managers, when they are out doing fundraising, they will be marketing their responsible contractor policies, their ESG practices, but we think there's still room for improvement of how this is implemented on the ground. And finally, the reputational benefits to having good practices is an important component, because the trustees of different funds speak amongst themselves and the information circulates. So when you have an asset manager that has a good reputation on labor rights, or an asset manager that has some weaknesses in specific projects, there are networks of communications among trustees and asset owners. So with this being said, I think I'm going to end my presentation here. Thank you.
Thank you very much, Hugues. Again, some really excellent examples there. As a reminder, if you do have any questions as we move into the question and answer sessions, please send them through via the chat function in the WebEx platform, and we'll be very happy to raise those with the different presenters. We've had one come in to kick us off and directed at Elena in particular, but others feel free to chip in as appropriate. The question is, can you elaborate on the statement you made about benefits being available to all employees, not just full-time employees?
Yes, so it's making sure that you're covering your overall workforce. So sometimes companies, when they look at benefits, it's benefits that are offered to only employees that are full-time, but not necessarily subcontractors or employees that are, even employees that are part-time, or employees that are hired through agencies as well. So it's just making sure that whatever benefits you offer to direct employees of the company that is doing the work, that these benefits are also available to other staff. So meaning anyone else that is working through subcontractors or through agencies.
Okay, great, thank you. Got a question for Chris. When you mentioned about IFM developing its principles on how it approaches ESG, you talked about the board. How important has board support been for developing and implementing your approach? Could you have achieved or done what you have done in these different areas without the board's backing? Seem to have lost Chris for a moment. In the meantime, I'm just going to ask, and interested in both Elena and Hugues' response to this, in terms of what's made us, what have been the constituent parts of a successful engagement, or what makes a good engagement? Hugues' perspective when you're sort of engaging through trustees, with investors and asset managers, and obviously Elena in general, kind of what do we see within the PRI as kind of the good ingredients for positive and proactive engagement?
Sure. So I would start with you need like good research from the ground. We need to have a very solid case, because when we're approaching trustees, we in the committee, we always need to be aware of the different pressure that and what it means for a trustee to raise a specific case at the board. So we really want to make sure that they have the right way to frame their arguments. So fundamental for us to kind of at the committee to be doing a bit of a triage and to really sort of support a trustee and often it's going to be not only an individual trustee, but working with various trustees to give them the confidence to raise this with management or staff within a pension fund, because through our different networks, what we do see sometimes is that some of the ESG staff want to actually help out on a specific issue, but that they don't have the ability to do that given the different compartments, I guess, within a pension fund. So it comes back to the silos, I guess, that you can see across different departments within institutional investors, and how the responsible investment team might not be as well integrated, I guess, across departments as we would like them to be.
Yes, and I think in our experience at PRI, I think is similar to what Hugues was saying. When it comes to companies, I guess integration of sustainability functions into commercial functions is not necessarily as integrated as we would like it to see. So good engagement is when you're talking to companies, well, first it's making sure that you have not just investor relations on the table, but also sustainability teams and teams that are looking after labor rights and human rights. And that could include people from working on security, working in legal, not just sustainability, but even communications and reporting as well. So it's making sure that you get information from different parts of the organization in terms of what is happening on the ground. And I guess, yes, in terms of other aspects of engagement is understanding as well the company that you're trying to engage, to understand, well, what are the main issues that company should be focusing on. That's good in terms of keeping the dialogue, understanding what is material, understanding what are the issues where the company can create the biggest negative impact to have the most positive impact, and then try to engage on those particular issues. And then again, research is important on that side of things. So having research on the company, but not taking the research as the only truth, but taking that information to the company and get them to feedback on that in terms of what they're doing, or why a particular score in a particular index is what it is. So that's really important for engagement, but definitely is trying to get the right people to come to the engagement.
Perfect, thank you. And another question for Ug. When looking at asset owners who use internal managers, do you have examples of how to bridge the ESG maturity gap that you talked about?
Again, I think I would say it's I'm just going to go back to this sort of triangle that I was presenting, and getting the buy-in from if you do sense that there are silos within the organization, and that you're not, say, as an ESG practitioner, as a sustainability professional, that you are not able to effectively work with, in this case, an infrastructure team. It's something that needs to be placed on the agenda of someone that might have a better view of the entire organization, whether they are the executive managers or the investment committee as well. I mean, the investment committee of pension funds are very important sort of units in order to drive better collaboration within the investment, the asset owners, I guess, that have internal capacity around infrastructure investing. But I mean, having a strong policy is, of course, the first component, and once you have that, it enables you to sort of go and ask the questions, and you're on more solid footing, I guess, if you are a trustee or a practitioner, to be trying to say resolve an issue around labor rights in an infrastructure project, if you're able to show up with a policy that was adopted that has the entire institutional backing. So that's another thing that I would point to.
Okay, great, thank you. Any more questions coming in? Just one, and probably back to Elena. You looked at some of the studies from Video Iris, which don't paint infrastructure necessarily the best light, or let's say infrastructure-related sectors are necessarily the best light in terms of some of their ESG performance. Why do you think that is?
First of all, I think, well, I mean, again, I'm not speaking for Video Iris here. I think there's someone on the call from Video Iris, and they can give you more information on the sectors. But as I see, the information that they collected is from the global state of the sector. And as I mentioned, the highest scoring companies are in America and Europe, which is not a surprise, because well, the best performers companies are where maybe legal structures are more advanced. So we are also including a lot of companies that operate in areas where maybe governance is weak, and therefore practices are weak as well. So it's a global average. Yeah, so I think that's something to keep into account. And then again, I mean, even the latest report on from the UN Working Group on human rights, business and human rights, I mein, their results are that even though the UN guiding principles have been adopted by many businesses and by many countries, their implementation is quite poor, and we see a lot of gaps in human rights practices around the world. So unfortunately, we're not where we want to be. There's still a big gap in getting companies, governments, and different actors in society to respect and protect human rights. So I think even though the sector as a whole doesn't do very well, I mean, in general, other company sectors from other reports that I've seen, they're not doing that much better either. But I think it's a general gap that exists in the world around respecting and protecting human rights.
Yeah, very much so. And there's obviously more to be done, but in general terms, I think progress is being made in the right direction.
No, and definitely there are a lot of cases of very good practice examples and companies that are leading the way on human rights and labor rights. But then there is a lot of companies that still need to, they're still very much at the beginning of the journey or not looking at these issues at all. So this basically are as well the companies that maybe investors should try to look into and push them to do more.
Great. Well, we're coming to the end of our hour here. Chris, can you hear me? Or are you able to?
I can hear you, Simon. I'm not sure if you could hear me back again.
We can. So just before we finish up, then I wanted to go back to the question that was put earlier in terms of, I guess, the role of board support in guiding your work and how successfully that's been implemented within IFM.
Sure. So two things, and I'll be quick as well, because I think the board support was essential for us in many ways, because it also resembled what our philosophy and our cultural values are as a firm, that they were so committed to pushing the agenda with us around labour rights and human rights across the investment classes. But equally important for us was the alignment with our end investors, so pension funds around the world, and the belief that many of them have to have responsible contractor policies, which we co-wrote with many of them as well. I think that alignment between investor, board, and ourselves was essential and allows us a more united and powerful voice when we go to our investment companies around the world to encourage them to put this front of mind too. So it is an alignment thing. So it was really important.
Great, thank you. And I think that's a really important note to end on. It also speaks to some of the comments that Oog was making about, obviously, these pension funds are often made up of contributions by union members, and so they have those interests in relation to labour very much at heart. And if there are probably a couple of takeaways that I would conclude with, is it is very much that alignment both at a board level and through the different investors and the pension funds is absolutely critical to achieving success in these areas. But also, I think it's been clear through some of the examples that both Chris and Oog have highlighted, and some of the more general comments that Elena made, that this isn't a zero-sum game in relation to labour and investing. Too often, I think the argument gets made very simplistically that kind of depending which side of your argument is on, kind of labour good, labour bad, investor bad, but it's not a zero-sum game. Both can achieve their objectives, and by working together and by engaging in the right ways, then you can have real success in different projects and with your investments. So with that, I'll close the webinar. Just a final thank you very much to all our presenters, to Elena, to Chris, to Celia, and to Oog. And we obviously look forward to engaging more to our audience and to our signatories on these issues going forward. So thank you.
Thanks a lot, Simon.
Thank you.
Thank you.
Thank you.